Now I can see that there is a delay in when I move things around for how it shows up, which kind of makes sense. Yeah. Oh, okay. Yeah, there is a delay. Okay. That's okay.
Just a quick good afternoon to everybody who is filtering in. It's a couple of minutes early, so we are not going to start just yet, but Chris and I were here and ready, so we figured we'd launch the call and let the attendees start to filter in. We'll give it a few more minutes and then we'll be back to you.
Is this Chris? Can't sit like that. I can't hear you.
Oh, okay. Maybe if I unmute myself.
That helps.
As I will start my I'll start my speech again. So good afternoon, everybody. It is Wednesday, 4 p.m. webinar series with Chris Carlsson. He's going to be talking about the SBA and the various rules and regulations and changes that are coming out with the funding that they have. We are going to get straight into it. Today, he's going to be talking about some of the forgiveness requirements. Quick housekeeping comment, which is for the Q&A. For those of you that have been on before, for Q&A, if you could please put your questions into the Q&A function in Zoom. Don't use the chat function because we won't be monitoring it. It's much easier for us to regulate the questions through the Q&A function. That way we can make sure we get to as many as possible. I think that's it. I'm going to hand over to Chris. He's going to deal with the subject at hand. Thanks a lot.
Yes, hi. Good afternoon, everybody. Welcome back to this webinar. Today, I think just going to do a quick recap of what we have been through. And I'm going to also go through more of the meat of the calculations for the forgiveness, how we calculate the forgiveness and go through what we have to do. And I went out, and actually there's some prominent people out there who write articles for Forbes, etc., who put together an Excel spreadsheet that will do the calculations, and it did kind of halfway, but then we actually needed to get all the way for one of the companies I'm associated with. So we actually went ahead, worked over the weekend to put together a worksheet that does the calculations, and it kind of automated and dumps in payroll reports that are needed into the sheet. And then also you can use it for do various scenario calculations. So without further ado, let's go through the process here. So recap, PPP, the Payroll Protection Program, still available. Last I heard, there is about 100 billion left in the program. And I think there's some confusion, and also I think actually that the application itself that came out for the forgiveness ended up being a little bit of a deterrent, because I was speaking to a couple of bankers yesterday about something else. And they said that their banks have started actually having to divert some people back to the PPP program because some small companies started to actually return the money because they thought it was too difficult and too much to do. And I can't blame them for that. I think it's a mistake. It's good money. It's cheap money. And this is workable. In addition to that, the House of Representatives majority chair here, Hoyer, is supposedly introducing a bill tomorrow that would take the 8 weeks and make it 24 weeks. Now, some Senate people saying 24 weeks may be too much, we may be a little bit less. It's pretty clear at this point, would be very surprised if the 8 weeks doesn't become something longer, 12 weeks, 16 weeks, something like that, which makes it a lot easier to get a full forgiveness when we can stretch over a much longer period of time. We can see that when we go through the calculations. Anyway, so there are still $100 billion left in the program. And again, it's a good loan, no personal guarantees, no collateral, no recourse, or personal recourse only if you misuse the funds or lie, those kind of things, something probably is going to be pretty egregious to get there. And there is a forgiveness. And that's what we're going to go into the meat of it today. Again, a little bit of a repeat of the last time. Sole proprietors done differently than what we're going to go through today. What we go through today are for multi-LLCs and for corporations with employees. Sole proprietors, not quite sure if they're going to come out with a different application, but at this point, it's said that 75% of sole proprietors' PPP money will be automatically forgiven based on that they're going to consider it as owner replacement compensation. And then you can add eligible expenses to that, and that's the same as we're going to go through here. So, one of the most important part of forgiveness, don't forget this, because it's not going to be automatic. You're going to have to apply for forgiveness. The bank or the lender you use to get the PPP loan will probably remind you, but that could also be an email. It's not going to be a call, it's going to be an email. That could be in your spam box, so you won't see it. So once you're done with whatever period of times it ends up being, 8 weeks, 12 weeks, 16 weeks, 24 weeks, sometime close thereafter, look for an application for forgiveness. It's going to be there. You're going to have to ask for it. Unless Congress at one point in time just said, it's all forgiven, forget about it. I doubt that will happen. So at this point, count on an application. If you don't fill out an application, you're going to owe the money. You don't want that. Here again, to understand this a little bit better, I'm just going to hash through quickly concepts that are in this forgiveness application that you probably haven't seen before. I hadn't seen it before. So there are 3 different ways of getting calculating forgiveness. It all comes out in the end, and it's the lesser of those 3. That is not as complicated as it sounds. Then we get into the more complicated aspects of it here. And the first one is that there is a covered period. What the covered period means is that at this point, it's 8 weeks. That is the 8 weeks after you get the funding, 56 days, including that first day. So it's the day of funding plus 55 days. That's the covered period of time. For payroll itself, we have some wiggle room to move a week back and forth. And we're going to get into that because it could be important for you to minimize reductions. So anyway, that's the covered period. That's the basis for everything, that covered period. That's everything is get compared to that. Then you have reference periods. 3 of them, you can select which ones to use. And that's why you're going to see we actually need to run payrolls for all of those periods so we can actually do the comparison. And that's for the FTE modification, which means full-time equivalents. There is a comparison to how many full-time equivalent employees you have on the average in the covered period, compared to a reference period. And the basic concept is you are going to have a reduction in forgiveness if you decrease the number of full-time equivalents compared to the reference period. Then there are safe harbors to get out of it. And those are important to know because you could be able to plan around it. Then there's a wage and hour reduction. And that is in case you reduced a person's pay in the covered period compared to the first quarter of this year. And it's by person, and it affects you only if you reduce that person by more than 25%. If you didn't, there's no effect. So it could affect people who decided that instead of reducing people, I am going to pay everybody less. That could happen. But remember, it's a pay rate, not actual gross pay. And you're going to see how that functions. We're going to go through that. Then there are employee tables. Table 1, people who make less than $100,000 a year. Table 2, people make 100,000 over 100,000. The first table is 100,000 and less. And the table for the covered period is where everything takes place. And we're going to get into that too. And I mentioned safe harbors. For these reductions for FTEs, full-time equivalents, and wage and hours, there are escape hatches. So you look at it and say, okay, oh, I'm getting a 25% reduction in my forgiveness. Well, maybe not. If I compare Y to X and Y is bigger, I'm out, then I'm escaping. That's your safe harbor. And we're going to go in and we're going to look at those. Now, here, there are actually, we mentioned this the last time, there are 10 pay periods to actually compare to. And that includes, there are 2 pay periods, 215 to 426 this year compared to 215. And that is the week off. I should go here where you can see that. Come on, we can do it. Maybe. Oh. It doesn't show up. Anyway, so here, when I say 215, that actually means the pay period in which 215 exists. So it all means pay period. So when it says 215, it's the week of, 630 is the week of, 1/1 is the week of, etc. So the 2 first ones here, that's hard for you to see. This one too, number 1 and number 2. Those are kind of gates for safe harbors. For some reason, not quite sure, I guess it makes sense to some extent, that those periods are compared to determine if you can go to a safe harbor. Then after that, you're going to look at the safe harbor. We have the covered period. Then we have the first quarter. Then we have 3 reference periods. These are the reference periods that we're going to look back to. And those are the 215 to 630 in 19, 1/1 to 229 in 20, and any 12 weeks between 5/1 and 9/15 in 19. So you're going to have to pick here. And then we have the actual safe harbor calculations, periods we need that for, which is the week of 630, 1/20, 1/1, and last week of the covered period. So to be able to plan, we should be asking our payroll company to give us payroll reports already now. So what do we need for this period of time? For this purpose, we need the hours worked for everybody, and we need the cash compensation. Last time I said we needed standard full-time hours in there. Yes, we do. We need that, but this worksheet that these guys made up actually has that built into it. And I sent this out to a number of people today, and you probably, some of you on here. Claire, we will send out this worksheet again to everybody on this webinar.
We'll send it after this.
Now, let's dive in here into the worksheet, into the meat of it. And again, here, as I am, you get to look at my beautiful daughter and me dancing at her wedding while I'm trying to get the worksheet there. And there we go. So we're going to start over here. How does that look? All right. It kind of looks. So what we're going to do now, we're actually going to into this specific worksheet, which is a worksheet that feeds all the numbers that we need for the PPP application. And why I'm doing it now is because some people who got the money very early are coming up to their 8th week. So it could be very important that those calculations are starting. We're looking at this. Understanding is what we need to do. What the people are saying, who also know these kind of things and how they move, is that we are well advised to try to do the application as early as we can, because there are loopholes in this. And as time goes and as SBA looks at this, it could be that they start looking at the loopholes and they close them. So the first thing is actually to track the eligible expenses. So here in this, I put in some numbers for example company. So here we have covered period. The first covered period here is actually the first day is when we got the funding. So in this particular case, got the funding on 4/20. 56 days later, that's 6/14, that's the end of the covered period. Now, the second period here, called the alternate payroll covered period, is the one where you decide if you want to start it for payroll purposes, all the payroll costs starting to coincide with the payroll period. And that, my friends, I would have to tell you that it makes it a heck of a lot easier to do any calculations on this. If you're going to start in mid payroll period, everything has to be prorated at the beginning and at the end. And this is hard enough to do. I wouldn't recommend it unless there are clear economic reasons to do it. So in this case, it's actually a week later that the payroll period starts. And that means and in this case, the company has elected to push it back a week. And the reason for that is going over here. And yeah, it's following me slowly but surely. There we go. So when you look at that, then you're really looking at if you move it, the first week falls out and the 9th week comes in. So now you have to look at, okay, where do I have most payroll? Do I have it in the first week or do I have it in the 9th week? If you have more payroll in the 9th week, and if you are a shore business affected by things going on here, you're probably going to have that particular situation. So you may be well advised to look at going to the 2nd through the 9th instead of 1st to the 8th. So you look at which is the biggest, manage the FTs, and that also can affect your safe harbors, because one of the safe harbors is the last week of the covered period. So first thing you do in here, you put in the amount of loan you received for PPP, and then you start tracking your expenses. And the payroll expenses is as they come. And when you get this sheet, you can start reading what all these are. There are actually notes in each one of these that you can see what it is and how it's used. So I kind of just, with some realism, made up some numbers here. So you can see how they're put in, and what is supposed to be in the description over here is the vendor. And then this over here, then you have a date and the payroll, health insurance, state and local payroll taxes, retirement contribution, interest on mortgage in place before blah, 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 rent and lease payment, utilities, and then the supporting documents is saying it's on page 10 in the application. So these all are going to add up here. As you go through your expenses, you track them so you know where you are, so you can start actually keeping track of your numbers. And at the very end, the totals are down here somewhere. There they are. Follow this through. The next worksheet is the most important one. And I know this is hard to see, so let me kind of take you through it. So this is actually table 1 and table 2. Table 1 for 100 and less paid. This is where you look at the full-time equivalents, where you add up all your payroll costs for the covered period, and you compare the compensation per person. So in this particular sheet, you're not going to have to actually do the calculations. If you look here as I go through, if you look in the little bar on top, you see there are formulas in each one of those. So you don't have to do the calculations. What you do have to do is for each payroll period, actually dump in, or if you're unlucky, and maybe if you don't have that many employees, we made this because in the first particular company we have here, we have some 80 employees, and we're not going to do this by hand. That's just not going to happen. So we're going to get a payroll report that we dump in here by name, and then maybe social security number. We might have to do that. And then hours worked and the compensation, total compensation for the period of time. So then we're going to do this for all the pay periods. And this is going to fill in here. And this is where it tallies up the total compensation, total hours, compares FTE, and all those kind of things. This is where all the calculations take place on this particular sheet here. And so what happens here in this sheet here, you dump in the payroll for the covered period. Then on the yellow tabs here, we have payroll here to be dumped in each one of those yellow 4 columns here. And the same thing, the actual average compensation and those kind of things are automatically calculated. What you do is get the payroll in. The rest takes care of itself. So you have payroll period 1, payroll period 2, for 215 to 630. Each one of these, you dump in the payroll. And then you get the calculations. And each one of these here, the tabs down here, have its purpose. So the 215 have a special purpose because that is comparisons. So if we have for full-time equivalents that 215 is larger than 215 through 426, then we go on, because that would mean that you're going to be in trouble, probably. So here's designed a fail-safe, a hatch. So you go on and compare the 630 to 215. And that happens automatically. Once the payroll is in here, these comparison happens automatically. And this is where it takes place. And you see here, in this particular place here, we're calculating by person if that we were either below 75% in the covered period compared to the first quarter for that person. Then what it does is that if we were, it goes and looks and see, okay, so was 215 higher, okay, or lower? So then 215 higher, then we go and look at 630 compared to 215. So that's how the details happen. And the beauty of this is really that it does it automatically once you get the payroll in. And for you SCORE people out there and attended here, I bought the thing personally, and I added to it and edited it and those kind of things. And you get to get it for free. What you have to do, and this is really the people who sells it, the CPAs who wrote the Forbes article, they use this for large, small companies. So it does work. They have tried it out, all those kind of things. So what you need to do really is to go and go through this with your bookkeeper and CPA, or if you have a little bit bigger company, if you have a controller within the company, to go through this so they understand what they need to do. If you're a small company, you can do your own input of this here. I mean, for each person, it's the name, Social Security, last four of social, the hours worked, and the actual gross pay in that pay period. So now let's say that we have all this done. So we have all the things in. Now what happens here is that if I can find my way, that there are calculations at the end here between table 1 and table 2, all this takes place. Down here somewhere, we're going to get to it. So what takes place in these sheets, once you dump in the payroll, is that now it starts calculating what's your total average FT for the period of 250 to 426, 350. What's the for 215? It's 4. So now it says, yes, this is bigger than this. So we are going to have to go and look at the safe harbor. So then we look at the safe harbor. What is it there? It's 4. So it's equal or bigger than that. So yes, we are in a safe harbor. We don't have to get a reduction for the FTEs. This is done automatically. So that this is the worksheet. Comes up there. This now feeds into Schedule A. I know I'm doing it fast and it is complicated, but it isn't me, it's the application. And what we've tried is to actually get it to automate it. So you can start with your financial people, do planning. You can play around with the numbers and say, oh, okay, what if I do X and Y and what happens? So in this particular case, it is the cash compensation was $52,000. That was all tallied up in the worksheet. And line 2, average FTE was 3.8. There was no salary reduction. Remember, we had we actually ended up in the safe harbors and we had no effect of it. So table 2, we had nobody that wasn't an owner who got paid, who had a compensation over 100,000 for year. Because the total maximum forgiveness for anybody is $15,385, which is corresponding to $100,000 a year. So then this is from table 2 for highly compensated people, or their opinion thereof. Then this is now coming in from the worksheet, the very first worksheet here, the expense tracker, where we tracked our expenses up here. They're now feeding in here in this worksheet. So, and those are added to, I'm going to make it a little bit smaller so we can see a little bit more of it. A little bit better. So we have the expenses 52, and then we have health insurance 12,000, retirement contributions, going to come back to that, and the total amount paid for payroll taxes adds up to $69,000. And something happened here. Let's see if we can fix it. So then there's another safe harbor here, and that is that looking at if we reduced our FTEs or number of people employed from the last week of the covered period to 1/1/20 that week. And in this case, we didn't. So we have another safe harbor for the FTE calculation here. So then we go on and look at, this is all coming from calculations in the first worksheet. And here's for the reference period. We had 4, and in this case, we say, no, we're not a seasonal business. At one point in time, later session, we're going to go through that. Then we look at the 12-week period. And in this case, it just so happened because I did it quick, putting in the numbers. So they all ended up 4. So we pick one of them. It doesn't matter. If we had a different number here, it automatically picks the lowest number for the reference period, because you want to have a low number in the reference period, but to compare to, you want to have a higher full-time equivalents in your covered period. So we had actually the reverse, because we had 3.8, we have 4 in the reference periods, but we had a safe harbor. So we are not going to take a reduction. That would have been a 5% reduction or something like that from that otherwise, but we're in a safe harbor, so we don't have to. So now we're coming to the end process here, to the PPP forgiveness actual calculation. So there, remember from the worksheet A, 69,000 total there, and then for the payroll cost, including health insurance, etc. Then we have business mortgage insurance payment of 3,000. We have rent and triple net of 15,000. Utilities 3,400. We had no wage reduction in this, and so that a total 90,836. We had safe harbors on the FTEs, so we have no reduction from that, so it's 90,000. However, the calculation, we only got $86,000 from a loan. If we go back here and say in this example, you had gotten 100,000. Then this looks different here. And 86 is no longer the least amount, but it's actually that number here that we calculated, the 90,836. And then there's the third one, and that is the payroll cost of 69,000 compared to the 75% requirement. And that, my friends, is also another thing that probably going to come up tomorrow, that requirement is going to be lower. So we get that number to be higher. So instead of, if that's down to 50%, this number here from 69,000 doubles to 69. So it gets better. The longer period of time, instead of 8, 12, 16, and the lower that requirement is, the better it gets for us. I know I went through this fast, but you're going to get the worksheet. You're going to get two of them, one with the example and one without anything. And with this example, or whichever, you can take one and start what you're guessing your numbers are, start getting them though. And then you can start playing around with scenarios and you can see what it means here. And also, you can also start playing around. There's almost nobody who's out of their 8 weeks anymore. Most people have quite a bit left. So you can now start saying, okay, wait a minute, week of 630, if I have a huge FTE reduction, what can I do? Well, you could hire some people temporary the week of 630. Is that the real intent of it? No, but that's how it is. So that you don't get that reduction. What else is in there? So if your payroll isn't big enough to cover enough of forgiveness for the loan, you can look at your pension contributions for the year. As far as we can see now, there is no restrictions. You could actually pay in all of your year's pension contributions in these 8 weeks. And that all gets counted. And then you say, well, I can't take the money out of the company. Oh, okay, you may not be able to do that, but you could do this and then borrow from your pension account and put it back into the business, and you get that number forgiven. And when you get the number in payroll costs forgiven, you get a multiplier of 33% from that. So if that's $10,000, you actually get $13,000 forgiven. Up until the loan amount, of course, there's restrictions here. All right, I know it's a lot, et cetera, so maybe we should have some questions.
I was going to say, let's take some questions. And I've been answering some of the more administrational questions, just typing them in whilst Chris was talking. One of the things that's very important, just as a housekeeping comment, if you are looking for copies of the worksheets, etc., they will be sent out to the registered email address. Whoever registered for this webinar, whatever email address you use to register is where it will go to. It will come straight from Zoom. So the links are Dropbox links, so you'll have access to them to be able to download, but you must have the email address registered, check the email address you used when you registered. So just now just going into a couple of questions. One of them is, I want to know if I can still apply for PPP loans.
Yes, you can.
And
it's
then,
still open. You got to find a lender that is also open, but there are still a lot of them. So especially some local banks have closed it down. And I think I saw Wells Fargo has shut it down, but there's still there's a lot of banks still open, and there are a lot of non-bank lenders.
I know that Cabbage is still accepting loans. I know that PayPal is still accepting loans. through Loan Builder, but that's owned by PayPal. And I also know, I just found out yesterday that Manasquan I think it's Manasquan Savings Bank. They're a small local bank. They've actually partnered with Cabbage, and they're accepting loans and processing them through Cabbage. So if you need help and you need a bank to actually
Claire, I'm going to ask you to use your entertainment ability now, because I'm an old guy and I have to run to the bathroom.
All right, well,
So you're on the show.
I will run the show and see if there are some questions that I can answer. So Cabbage, PayPal, I've heard that Intuit is processing loans, but I believe you may have to be a QuickBooks customer, but those should be some good options for you. So another question is, how long does it usually take to get approval for the PPP loan? The approval, from my understanding, is it's relatively quick. Once the applications are submitted, the issue is sometimes the backlog that the banks are experiencing. The way the loans are processed is all through AI. So the application, it's really important that all the information on the application is correct. And if it's correct, then the bank will submit that to the SBA very quickly. I had one customer that had a turnaround that they put in an application with Santander. They banked with Santander and they put an application in with them, and their approval and funding was within 5 or 6 days. But I had another customer who went through with Cabbage, and it's been about a week to put their application in and still haven't had a response yet. So I think it really depends on the bank.
All right, I'm back. Thank you, Claire.
Okay, so now I'll just go back to some of the questions that I didn't answer because I couldn't, or I didn't want to get it wrong. So I've had my PPP loan for 2 weeks and I haven't touched it due to the fact I'm not open yet. I was debating if I can even return it and then maybe reapply unless they extend the forgiveness timeframe. Could you return a loan and reapply?
You can return a loan, but you can only apply once. There are ways of asking for more money. For example, if you were a partnership, multi-LLC, for example, and you didn't do anything with the active owner's compensation from a Schedule C, then you could do that. As far as I know, you can't return the money and reapply. That doesn't do that. I would not return the money right now for several reasons. One is it's probably going to be extended. The number of weeks is going to be extended, and also look at the business and see if it remains 8 weeks. Very unlikely it is going to be some extension. So look at what's going to be there, and maybe some of it gets extended. Also look at the business and say, remember, this is a 1% interest loan, 1%. So if you think you're going to need the money in the restartup phase, I wouldn't give it back now. I would use it for that. And I would wait a little bit and see. There's no prepayment penalties for this. So everybody has to make their own decisions, obviously. If it was me, I wouldn't do it.
Okay, so now we have another question, which is, I was funded on May 21st. My payroll is monthly. What do I do for the covered period of forgiveness?
The period is the 8 weeks. The period is the 8 weeks from the funding, but in terms of payroll, you could, from the 21st, you could start it on the 1st. You could do that. And then you count the 8 weeks from there. And you You should talk to your bookkeeper or CPA about this, because you can either use accrued or paid. They prefer paid. And I think there are some advantages of using paid, because there are bonuses and hazard pay and those kind of things that you can do to any employee. And that's a literal thing, any employee. And it obviously works only if you don't bump over the 15,385.
Then another question is, if I have both EIDL and PPP, are there any calculations there that affect forgiveness?
Yes, we didn't go through it here. There is a place here. It's the grant part of the EIDL. And that's the part that for many people just kind of magically got dumped into your bank account. And that was based on $1,000 per employee up to $10,000. So that very first payment you got will be deducted from. However, it's a reference line. Don't deduct it from this calculation. Don't deduct it from the application number, because it said that SBA itself is going to do it. And who knows what will happen with that. But if you do it yourself, it's likely it's going to be deducted twice. So there will be a deduction if SBA can figure out how to do it. But not for the whole EIDL, just for the grant portion, the small portion.
Okay, so now we have, if a sole proprietor has a home office, does the mortgage, utilities, phone, internet of the home office get forgiven? Are U-Haul rental and storage unit rentals forgivable expenses? And is there a list of forgivable expenses that the SBA published?
Not more than what we had here in the expense tracker. What those expenses are here are the forgivable expenses. And in terms of what's said in terms of guidance on home is no, that you really can't deduct your home expenses. If you have separate utilities, if you have separate internet, and if the bill goes to your business instead of the house, yes. But if you have storage units you pay rent for in the name of your business, even if that's a DBA and you use it in business, so yes, I would say that is, yes.
Okay, so I think there was a question, do we have to subtract the EIDL grant from the PPP? And I think we've answered that one.
No, well, there are two answers to that.
All right, go ahead.
It's SBA is supposed to deduct it, so don't do it yourself. Because if you do it and they do it, you're going to deduct it twice. Don't do that.
Okay. So there's another question. What if we're still closed and the employees are on unemployment? We kind of had a similar question to that, but.
Yeah. So what happens, let's say that it stays for 8 weeks, you don't open up, and you have no employees during this period of time, and you're not a sole proprietor. Number one question is first, how do you treat yourself? Do you pay yourself? I would, at least that part is forgivable. And then, do you have other family members in the business that you would like to pay? Okay, there's nothing saying that you can't pay them. That aside, looking at the business, so if you need the money, you need the money to restart up. And then if there is no payroll, maybe other than yourself, you get that little forgiveness, then at least you have startup money and it's 1% money. So I would say look at the business, not just the forgiveness part.
Okay, then we have, we started our LLC in June of 2018. My partner and I had not put ourselves on payroll yet. And all of your payments were made, I think it meant to say all of our payments were made to contract/1099 workers. Does this disqualify us from participating in the PPP program?
No, you can do it based on Schedule C or K1s for yourself. For the partners, the 1099 are supposed to do their own. You don't count that as actual payroll, but what you took out of the business and what the net income is for each of you partners can be added up together and be the basis for a loan. What they do is that basically the net income, the right line on the K1, the net income for you, for the partners, and that's divided by 12, multiplied by 2.5.
One of the things that I've noticed with some of the bank applications as well, which is sometimes causes some confusion, is they're only geared towards people that are running payroll. So the bank, when the bank starts asking for the payroll information and the upload of the payroll forms, I think it's the 941s. Chris, correct me if that's the wrong form, but
yeah, no, that's correct.
Instead of uploading your 941 in the bank application, if you upload, you just include your Schedule C or your K1
Right.
there.
Yep.
Even though the application says upload your 941, just put the Schedule C or the K1 there. Some of the banks' application forms are still from when sole proprietors and LLCs couldn't do the application. So I've come up a couple of times this week.
Yep, absolutely right. That is correct. And as long as you, in the beginning of the application there, it asks you what entity you are. Put sole proprietor there, if you're sole proprietor, and then the rest should fall on. They should recognize it.
Okay. For the person who asked, I have a payroll company and an accountant that will do this part for me. However, I have questions about forgiveness. I'm not sure what that question, the specific questions are, but if you want to post them here, or you can email monmouthscore@gmail.com if you have specific questions. Another question is, can you use sign-on bonuses or vacation pay as part of the calculation for payroll forgiveness?
The vacation pay absolutely is there. Sign-on bonuses, I would say yes. They say bonuses are eligible expenses as long as they are part of a regular course business. And if sign-on bonuses are part of regular course business, they're part of regular course business. So I would say that yes, if it was me, I would do it, yes. Some of this is not clear-cut, and if you use a sign-on bonus, nobody's going to throw you in jail, and there's nowhere it says that you can't do it. So I personally absolutely would. Okay. Now, I wouldn't do it if it doesn't fit the business, because again, if you're going to pay somebody a $10,000, $5,000 sign-on bonus, and that doesn't have a business purpose, what just happened is that you just kind of wasted $10,000 you paid out now instead of paying it out over 2 years.
Then we have, if the money is used for rent and utilities but not payroll, will that part be forgiven?
At this point, no. They have this, right now there is a 75% requirement of the total forgiveness that has to be payroll and payroll related cost. So for example, if the payroll related cost, payroll cost plus health insurance plus retirement contribution plus some payroll taxes is $100,000. Then the maximum the rent and utilities and those kind of things can be is $33,000. That comes to to 75 and 25% split. So it's capped in there. That may change to the better. It may go to 50% when you then can use 50,000 instead of 33,000.
Okay, and then we have, so my 56 days ends on July 6th. Can I write checks on July 1st, or do payments have to be cashed by July 6th? This is for
No, it's when you do the act of writing the checks. It's when that happens, or when you do the direct deposit, you do the ACH and all that kind of stuff. It's the date of the act of actually writing the check that payroll is actually going out.
Okay. Can employers' payroll taxes be a part of the PPP expenditures?
The employers or the employees?
There's employers.
It is only the employers' payroll taxes that count for local and state, not the employees, because they pay them. So you won't get the forgiveness credit for that.
If you have to add some family members to payroll to help with reopening requirements that need to be done, and they are on unemployment from their regular jobs, will this impact their unemployment?
Yes. If you're not supposed to collect unemployment if you're actually working. But I've never had unemployment, but I think if I remember correctly from seeing it from an employer's perspective, there's partial unemployment, right? So if somebody was making $1,000 a week before, and now they're making 400, I think that there is some kind of a prorated unemployment on that. But general answering the question, no, if you're working, you're not supposed to get unemployment.
Okay, if a sole proprietor owns rental houses that brings in income, would those mortgage and utilities that the sole proprietor paid for the rental house qualify as forgivable expenses?
Yeah, if those are part of the business expenses, the business that sole proprietor does, yes.
Then someone has said, should I hire back the employees even if we are still closed?
Not unless you have a lot of money and that's what you want to do. I'm looking at it my answer now is a purely business answer. And I would say no, it's wasted money, and you're going to end up paying that money now instead of later. With the caveat that there is a 25-75% rule, which multiplies all payroll costs by not 1.33. So if you have the money, you're not worried about the cash flow 3 months down the road, yes, you get a 33% bang for that buck. So it's whatever your situation is good for you to do.
Okay, and then we have, I only got EIDL as an LLC partnership, no 1,000 separate for employees. What are your thoughts on that?
Say that again. They got the EIDL, they didn't get the grant.
Yeah, perhaps, Paul, perhaps you could, it says I only got the EIDL as an LLC partnership, not 1,000 separate for employees. And then it's just, what are your thoughts? So.
It's not one I've heard of before. Everybody I know that got EIDL did get the $1,000 or that first sum. But if you didn't, then you don't have a grant, and there's nothing to be deducted from the PPP. If you just got the EIDL, I would consider applying for a PPP.
Okay. If we're closed, but have to pay rent and employees that are on unemployment, it cannot be forgiven. Can it not be forgiven is the question.
Well, if you're closed and So regardless whether you're closed or not, if you pay employees in that covered period, then that's forgivable. I would wait a little bit and see what happens with the 8 weeks. So unless you have a lot of money, it doesn't matter. And you don't care. But if you do, and if you're like most of us, we don't have an over and over abundance, then if it gets extended, I don't think I would spend all the money to get forgiveness now on payroll that doesn't do me any good. I would rather wait to see if they expand it to 16 weeks and I'm going to have real payroll, then that becomes real savings later. So if you spend it all now, then later on, make sure that you then have money so you can pay the people at that point, because that becomes forgivable.
So back to the monthly payroll question. So if you receive the funds, can you set an alternate pay period? So if it was funded on May 19th or 21st, can you pick June 1st as the alternate pay period if you're going for monthly payroll?
Yes, the rule is the first available next beginning of payroll period is what you can go to.
Okay.
So if that's June 1st, yes, you can then go to June 1st to select that. And that selecting takes place when you do the application for forgiveness. But obviously you should look at it in advance. You can plan for all this stuff.
Okay, can you use the money for back pay and pre-payroll? Because when we open, I will not have enough income to pay returning staff.
Can you do back pay? Yeah, I believe so. You just can't exceed $15,385 for forgiveness for any person. And I'm not sure I understood the context of the question. If the question is, I'm going to hire back the people, but I can't pay them now, so I'm going to owe them for later. You can use accrued payroll, but it has to be paid in the first next payroll pay date, which is also typically the law. You only have so many days after the end of the payroll period to actually pay somebody. You can't leave that off the table forever. But yes, you can use accrued, but you have to pay it in the next payroll period.
Okay, and I'm going to just take like a couple of final questions because it is 5:05. So does the forgiveness max of 15,000 include retirement savings accounts?
No. The 15,000 is compensation. So if somebody's paid 15,385, that's capped out. And then if you then contribute to a 401k, that that employer contribution is part of payroll. So that counts. Yes.
Okay, and then I'll just do the final one. And there's a couple of questions that we still didn't answer, but I'm just conscious of the time. So once we've answered this final question, if you do have questions, feel free to email momscore@gmail.com.
Right.
And we'll get them answered for you. But so for the final question that I'm going to take is, even though my business is closed, I'm using the PPP to pay rent, but my employees are on unemployment. My question is, will that be forgiven? I do not have money to pay my own rent or to pay rent.
No, not at this time. At this point, at this very point, the only way that rent, utilities, business interest, lease payments, those kind of things get forgiven is within 33% of payroll. If your payroll is zero, it's 33 times zero, so that's zero. Now again, the 8 weeks may well get extended considerably, so you have now time to develop that payroll as you open up. Listen tomorrow and see what happens in the news. It could actually go tomorrow.
Okay, so thank you, Chris. That was great. And there's been quite a few comments coming through saying thank you so much. It's been very informative and thanks for the information. So I just wanted to
Thanks
share.
for attending. Appreciate it. It's been fun.
Share that. And just as Chris said, thank you everybody for attending. We appreciate it. We appreciate your support. Chris is here every week at 4 until really there's no more new information to impart. He's here every week with a webinar, and each week we'll have a topic that's somewhat relevant to what's going on in the most recent updates to it. A quick reminder that here at SCORE, we offer free business mentoring. So it is free to your businesses. So you can find a local mentor on our website at monmouth.score.org. You could also, if you have specific questions, you can reach out to monmouthscore@gmail.com and that gets monitored. So if you have specific SBA questions, feel free to do that. To the person who posted a question, is Chris available? If you go onto our website, monmouthscore.org, you can see the request a mentor and go in through that way. And
I'm not there.
You're not there? Okay, so then
I am on the national, and there is a reason I'm not there. There was a period of time last year I was sick, so it was too much, so I cut it down. But on the national score.org, they can find me, or just email me at chris.carlsson@scorevolunteer.com. 2 S's in Carlson.
Yeah, so we will be here next week. And if you have any questions in the meanwhile, Monmouth Score Gmail or Chris's personal Score Volunteer email address. And if you have friends who you think this might be helpful to, share the word. And thank you everybody for joining. We appreciate your attendance.
Thank you, everybody. Have a good night.
Stay safe, everyone.
Bye.